Hi, I'm Chris Frostad, President and CEO of Purepoint Uranium Group. We are a uranium exploration company operating in northern Saskatchewan.
Chris, good to see you here.
Good to see you.
Almost in your backyard.
Almost. Quebec City is a little, it's a quick plane hop, but we're here.
Thank you very much.
Yeah.
Good to see you. Good to see you. Are you so you're here at the conference, obviously meeting people, telling the story, that kind of thing?
Yeah, this is a conference we haven't been to before, but there's a lot of good people here.
Yeah.
A lot of good people speaking, a lot of high-profile names out there, Matt Gordon being one of them, and yeah,
that's some good interviews.
It's a good week.
I hear. No, it's been fun actually. Sort of seeing a few news stories. Kind of like that, and I think these conferences are starting to.
You can pick up a lot of themes, of things that are going on, and the way the industry is moving, and the way that people are approaching it or thinking about it.
The good news, what I'm hearing is uranium and copper are the two things that we need to be investing in.
It's what we don't have enough of. We never have enough of. Certainly, uranium's having a day.
So, I mean, I don't necessarily want to spend too much time today talking about the macro. I think that's well understood by our audience. But maybe for the guys and gals that are new to this, let's give a quick run through of supply demand fundamentals, and then let's get into your company because you've got some good things going on.
Sure. Well, we operate in northern Saskatchewan. That's where all of Canada's uranium comes from, and we provide the world with a great deal of that uranium. A lot of it now going to the States because of all the political nonsense going on around the world. And the real attraction up there is the grades. So there's a lot of, it's all very, very high grade, double-digit type grade deposits, which is why that's where we operate. We've been working up there for a number of years now. We have a couple of joint ventures with Cameco and Orano, who are the two of the world's largest suppliers of uranium. So they're very keenly interested in those projects and continue to support them financially and technically.
Yeah.
And we've really been focusing on a lot of projects that we were fortunate enough to pick up during the last boom. And we were in there fairly early. We picked up a large amount of land back a little while ago, and we're able to cull that down to and really focus it in on where we thought the prospects were best. The thing about exploration up in that area is it requires a lot of preparatory work before you actually start poking a drill in the ground. There's a lot of historic work that's been done. You have to understand. There's a lot of geophysics you have to do because uranium is not easy to find necessarily up there. It's in pods. You can miss it very easily with a drill bit if you're 50 meters offside. And so there is a lot of work to be done up front, and that's a lot of work that we've gotten out of the way. Which has allowed us really to focus on the projects that we think have the most promise, that are sitting in the best areas of the basin. It's not a big flat sheet of uranium up there, and we're now able to really focus on the drill and drill those targets that we've really been able to narrow in on and have, we think, the highest prospect for discovery.
Right. So let's kind of break it down because you've got a big portfolio of assets, right? You built up over time. Obviously, the thing that people will focus in on is the JVs that you've got going.
Sure.
Orano, Cameco, etc.
Sort of validates those projects, quite frankly.
Right. And as long as they're throwing money at it at whatever pace they decide, because so they've got other things on.
Apparently.
Yeah. So that continues to move that project forward. In terms of taking control of your own destiny, in terms of getting focused on what you think is important, can you talk us through that?
Yeah, well, those are the projects that we staked, that we've done a significant amount of work on in getting them prepared. And again, we were able to identify them right in that trend, that mine trend on the eastern side of the basin, where all the uranium comes from today, where there is a lot of data. And again, it gets crowded. When uranium prices start to move, everybody and his brother's throwing a uranium bumper sticker on their car. So it's to have been there early on and first and gotten those projects that are right in the middle of traffic, and that we've been able to get a lot of work out of the way, that really allows us to focus on finding uranium, which is at the end of the day is where all this money's going. I mean, there is a lot of money right now going into the ground in northern Saskatchewan, and somebody's going to find something. They have been finding something. There's been a lot of money put in it over the last 10 years, and there's been a fair amount of uranium found. But right now our focus is taking all the work we've done and nailing out those best targets and finding some uranium.
Well, let's talk about data. You said, there's a lot of data right? What does that mean? So there's going to be data which you generated yourselves. There's going to be data which is publicly available, because that's the way it works. I mean, explain that.
Well, yeah, there is. I mean, as it works, when you're holding a disposition or a claim in Saskatchewan, the rent, if you will, is the data you collect. So we have to spend, the number is $15 per hectare per year on exploration. And we ultimately give that data, all those results, to the government. They sit on it for 3 years, and then it's publicly available. So, going back to projects that we picked up 10 years ago, 15 years ago, and now there's been all kinds of work done around it. When we're evaluating and starting to vector in on those prospects, we're not just looking at data that we've created on our own project, but we've got a very large map now. So, for instance, we're drilling right now at our Turner Lake property, which is adjacent to and on trend with IsoEnergy's project, and where their hurricane deposits, they're sitting on a 35% average grade deposit, which is nuts. And we can show you that all of the work that Cameco's done, Orano's done, Denison has done around us, we can show you exactly where those structures are coming from, where the uranium's heading, where it's going, and it allows us to really narrow in on what it is we're looking for. I mean, the property we hold is probably twice the size of the city of Quebec, and we're looking for something the size of this convention center with a pipe the size of my arm. So this is not something you just run around, poke holes in the ground and look for.
I think that's fascinating, because when you put it like that, it kind of feels like very cheap prospecting, and in a way, in the sense you've got other companies' data, which the government has had for a bit. Now you can compile all of that and say, well, I better hope that the land package we hold is close enough to all of that. Really good, 30%, 35% is nuts.
That is nuts,
right? But have you been modeling that data and sort of trying to work out where you should be parking?
Absolutely, because what you see, and it's what we're learning over time as well, is they're not all the same. If you go back 15, 20 years ago, I mean, we've had this conversation, the Athabasca Basin is a bowl in the Canadian Shield full of sandstone. It is a basin, but it's full of sandstone, and all these deposits are right at the bottom of the bowl. Well, that's not necessarily true anymore. And what we're finding is that, it was always wherever there was graphite, at the bottom of the bowl, maybe some structure, that's where you look. Well, they're all looking a little different now. The thing that NextGen found on the other side of the province looks very different than what McArthur River looks like, which is very different from what ISO found. ISO's deposit sits at that unconformity, but there's no structure.
Yeah.
So that's weird. So there's weird things, and I can tell you, they've got a hole where they hit meters and meters of high grade, and 5 meters out, they hit nothing. So it's everyone's a little different, and you have to understand why you think it's there, what made it land there, and could that be going on where you are as well. So the more you see and understand this stuff, and not just your own, but you see everybody else's stuff and understand it, the better you're going to be at vectoring in on the next one.
Right. And so for you guys, money isn't necessarily cascading down through all companies. Uranium was on and up. We get it. The supply demand fundamentals, as we've talked about many times, it's definitely there. Stacks up.
Yep.
But new money looking in, generalist money looking in, and even existing uranium funds looking in.
I think what we're seeing is the money is there. The money is there, but the share price is not heading in that direction, because so much money is coming into the market, right? I mean, we're in exploration and or even development. And you're raising money, so you're diluting your companies. You have to. It's the only way. We don't have revenue, yeah. So it sounds a bit backwards, but that's in fact what's been happening. Is there's been so much money coming into the sector that it's been holding the share prices down for now, until we start seeing some of that money producing results. And if you look back over the last 50 years and you look at those spikes when a lot of money came into Saskatchewan, into uranium. It was 3, 4, 5 years later when all of a sudden there's a McArthur River, or there's an Arrow or a Triple R or something of that ilk. So it's there. It takes time, but it's
okay. Well, let's talk about what you do, because there's a kind of seasonality in some of this drilling, which obviously I guess it must be painful as an owner. In terms of not being able to get at it, and then for other areas perhaps not so much. So how do
there is some
you
seasonality, and what it does kind of allow us to work multiple things at the same time too.
Right.
Obviously, we've got geophysics going on 3 of our projects right now that can go on any old time because we're flying things around. As far as the drilling goes, typically the winter's always been the best time because everything's frozen, it's flat, it's wet, and you can just drag drills around. Right now where we are, and this is also part of the environmental issues and the community issues. They don't like us clear-cutting an area and putting a camp up, so we wind up having to use helicopters. So in the case of Turner Lake, yeah, we're helicoptering a drill in, and we're helicoptering core out, and we're working with a helicopter, and unfortunately that pretty much doubles your price, your cost. But you can't use a helicopter in the winter because the days are too short, right? So you can only get one shift in.
Right.
It's that kind of a thing. So there is seasonality to the whole process, but it also allows us to make sure that we can schedule and get everything in when it makes sense. I mean, if we could drill the same thing all year, we wouldn't be trying to run 3 or 4 projects in a year.
Right. So, but the question I always come back to, which is the best allocation of capital, best return on that capital invested. Right. Sounds really boring, but you've got to be efficient. Your shareholders want you to be efficient. So, what's your choice or your plan, your strategy for this year?
Well, the plan is right now it's Turner Lake, and again, because we have kind of an open end on that, we've got enough money in the bank now to drill for the rest of the year.
Right.
Now. Right now, we are hitting our best targets at Turner Lake. Right now,
example,
based on what we know. Based on what we know, we are right off the claim line where that IsoEnergy trend comes right through the property. Data
analysis coming into play here.
Right. So it's coming in, and what we've identified, I can tell you so far, is there is a cross-cutting structure. It's a significant structure that is offset by about 50, 60 meters. Right. So I mean, that is like a huge drop, which is exactly what McArthur River looks like. But it's that kind of a structure that nobody else figured out. Now, we were able to see it a couple kilometers away in drilling that Cameco had done. We go back to looking at other people's data and figuring this thing out. So we've been able to pretty much map where we think this thing goes, and we can now systematically start chasing that structure. It's things like that. So as we drill, and again, we've not talked about this before, because we're almost plotting hole by hole, because we can drop a scintillometer down at the end of the hole and see exactly what we've got. So you look at the core, you figure out the orientation, what you've hit, look at the radiation or radioactivity. We can now determine whether it's thorium or uranium, get the drill to the next spot. Don't go where we thought we were going to go. We're now moving it over here. So it allows us that sort of flexibility. If we find that we're running out of direction, like we may see that, okay, you know what? This is a better prospect now. Let's get over there.
Yeah.
So it's about prioritizing. It's about prioritizing on a hole by hole basis on where do you think the next best prospect is. And we're now dealing with so much data, 10 years of data of our own, other people's data, that we have got quite a comprehensive understanding of the geology, the makeup, what other people have found in their drill holes, and we can prioritize not even just between where we are at Turner Lake. We've got drill targets ready to go over at Red Willow. That's a quick helicopter hop away. So we can. It allows us to really, really get focused on finding something.
Well, that's the whole point of that. All this
and that's
discovery. Discovery is the game changer. It's the step change and share price usually in people's perception of your ability.
And we've seen people spend tens of millions of dollars proving that something isn't there.
Yeah,
and that's
beyond frustrating.
That's
beyond frustrating. Yeah, and then they've had to kind of flip back to. We've spoken to maybe 3 of them this year already, Uranians specifically, who had to move to a prospector model as a result. So we'll generate, we'll stake and claim, and we'll JV, outsource, flip, whatever. And that's the new model because they have not been able to make discoveries. Discoveries is the number one thing I think you're going to be judged on going forward.
It has to be. I mean, there's the money that's being spent up there is being spent by a lot of companies.
Yeah.
But the winners, but all the rewards are reaped by the one company that happens to utilize all that data and find something.
Okay.
And we'd rather be on that side of the fence.
Well, that's quite nice because it's like the question at the beginning was how do you control your own destiny to as much as one can in mining, that is the plan. We're not
because
no more JV. We're not no more.
No,
JVs.
You've seen what happened with Fission. You've seen what happened with NextGen. They were able to find something and control it. They spun out the rest of their stuff and created another exploration company. It's fine. Gone on to find other things, but they were able to then control that asset and control its destiny.
Okay, let's say, and I hope that happens. And we look forward to seeing results of this
next week.
Data-driven drilling. If it doesn't happen, you've got a big portfolio of assets. So I'm not saying jump to the prospector model, but in terms of revenue, access to capital, you've got projects in there which you could JV.
We do have a JV with, we've got our joint venture with Hook Lake and Cameco and Smart Lake. Smart Lake is one that we haven't drilled for about 13 years.
Right.
It's over near Hook Lake, so it's over on the west side of the basin. We had one drill program out there. We did start hitting mineralization, but then everything lit up over at the Hook Lake project with fission. So all of the money kind of said, okay, let's go look over there.
Yeah.
The light's better. We're now going back there. So we're working with Cameco on a geophysics program this year.
Yeah.
Because they want to get drilling there in January. So that program keeps going. Hook Lake keeps going. It looks like France with Orano is getting a little more open with their checkbook and want to really see some more work being done out there. So we think the budgets are going to be growing. And that work is cheap for us. It's cheap for them, quite frankly, because of the nature of the joint venture. But for us to come up with, for every $1 million in the ground, I only have to come up with $100,000 net. That ain't bad. So it keeps us relevant. It keeps us in the game. It keeps us going, and it keeps those relationships with those partners. Yeah. Right. Because if and when we find something next week,
that's just a phone call.
We've got friends, and who else is going to be developing projects in the basin? Quite frankly,
it's kind of interesting actually. So Iran, obviously, with the whole Niger thing going on at the moment, and obviously last week's headlines about Russian picking up Orano.
Russia's denying that, by the way. I think.
I know. Yeah. But you kind of got people to thinking about, how these bigger companies do try and replace, because I mean Niger was 4% of world supply. It's not huge, but it's not insignificant either.
Not insignificant.
And for France especially, which is very much nuclear power centered. They do need to deploy capital and try and work out where they're going now. So as Canada, they've got a few things and a few pies there.
Well, Iran has got a lot of assets around the worth. They got a lot of
elsewhere
uranium
in Africa.
But I mean, Niger,
Gabon,
or up, none of it.
Yeah,
I mean, yikes. It's all expensive, but I mean that's been the theme as well here, right? We're getting into the expensive stuff. All the stuff that was hanging out of the ground has all been found in mines.
Yeah, the easy stuff is well, that's true. Many commodities. I think I heard that yesterday about copper and gold as well. Sean Rosen was quite cool about that.
And that's been, I've heard that for a while now, but certainly Sean Rosen yesterday mentioned it more than once. Yeah, that the easy stuff has been found, and for these big mining companies keep passing around the same assets or leaning into them, or trying to wring more out of them, which is fine, but it doesn't fill the gap that everybody's staring at down at the other end of the tunnel.
It's getting busy here.
Yeah, I can hear it.
I think
something exciting's happening out here.
The hubbub is out, which probably signals to us that you better get out there and tell that story.
Great.
You're joining me on a panel with Dennison,
Atha. Yeah.
That should be a good one.
Yeah.
See what they have to say. Well, it's nice. Atha is obviously a new entrant, ex-Cameco guys.
Yep.
There, and Dennison obviously has built up quite a portfolio now.
They're another one of the few men standing from the last go around. Yeah, they're doing really well. Yeah, and I think Dennis is going to have the next mine in production up there for sure.
Okay. Well, Chris, good to see you, man.
Thank you, Matt.
See you soon.
Good to see you.
Cheers.